Let's focus in on Vodacom now. Vodacom is, of course, the largest provider of cell phone services to South Africans and part of the Vodafone global group. The share price has been on a strong run recently, closing this afternoon at an all-time high of 105 Rand and 70 cents. Paul, in 2010, you would have paid 54 Rand for the share. We're talking about a share that has had a massive rally.
Yes.
Is this rally justified?
Yeah, I think it is, because when it came out of the telecom group in that complicated unbundling, which took forever, and people weren't quite sure what it was capable of. It took a while before the full value of its earnings power became apparent, and its dividend was then increasingly jacked up. We've seen this movie a number of times before, when global companies like Barclays or Vodafone or Walmart and so on come into this country. Partly what they've got to do is get their money back that they spent. So the dividend distributions normally get hiked, and that's certainly been the case here. I think for Vodafone, it is an important cash cow, but it's also part of their growth story, and it's got all the same strengths that we were talking about with regard to MTN First. The only thing is that it's constrained in terms of its market to sub-Saharan Africa, and it excludes obviously Safaricom, which is in the East African market. So it's got many attractions, but it is a little bit hemmed in, and at current levels, it's really moved up. It's not particularly expensive, but I think it's starting to get to kind of utility level pricing in terms of its yield expectations.
Let's talk about Africa and Vodacom, because of course it's not really a play on Africa, but it's starting to make good inroads into Africa right now. If you look at their latest quarter results, they're sitting with 21.2 million customers South Africa basically, and they showed 45% growth in services revenue there. Do you start looking at the inroads that Vodacom is starting to make onto the continent?
No, I find Vodacom a challenge in terms of looking at it from the African perspective. I think they've missed that boat totally. If you're comparing them to an MTN, for example, my biggest challenge, for example, with these guys is that as much as they've shown some increase in their presence in Africa, the margins that came through with that are very, very low. I mean, 14.5% margins. I don't think that's great enough. You've got margins in South Africa at 35% plus, and they're even higher in Nigeria and some of the jurisdictions where MTN is operating in. So you're also aware that they're trying to sell the business they have in the DRC, probably maybe to MTN. I think management has realized that they cannot continue to invest aggressively outside South Africa. So I think it will serve them well to just focus on SA and continue. Unfortunately for them, talking about dividend payouts and all that, they've hike the dividend payout ratio. I think it's now probably 80%. Do you want a business to be forced to keep increasing dividend payouts, maybe even to 100%?
Yeah, what is that signal, basically?
It's a challenge. They're going to have to stop. So I think the dividend yield and dividend payout ratio story has probably been priced in my view, in both MTN and Vodacom. So the attraction from that perspective, I think will continue to will start getting challenged from a shareholder perspective.
Okay, so let's also talk about the data space, because that is a space where we're talking about smartphones, you're talking about growth areas. I did a little bit of research. I went out onto the field today. MTN sitting with a 2G pack of 24-month, 149 Rand. Vodacom, 349 Rand. That's for a 24-month contract, 2G as well. Double the price that MTN is paying. Did you look at those price points? Or is it just a competition?
You've got to be careful to be comparing apples with apples. I mean, they all face roughly similar costs in terms of their international bandwidth backend, and they all have roughly equal network visibility and availability. Obviously, there are spots where people go crazy because their 3G signal is not strong enough. But I quite like that part.
But is that not more with A10 and Cell C, let's be honest?
Well, it's everybody's problem, really. I mean, everybody wants bandwidth to be blazing fast and very cheap. The customers can never have too much bandwidth. You can never be too thin, too rich, or have too much bandwidth, as you know. But for Vodacom's business
too much money, Paul.
I think, if you look at the way they spend money down here, they support the Bulls, the Vodacom Bulls, the Cheetahs, the Chiefs team, and the Pirates team. So their cost base here is quite high because they've really led far and fast I think there's quite a lot of scope for them to increase profitability by working the mix a little bit.
Are they focusing too much on marketing, on getting their brand out there as opposed to growing their business or doing increasing efficiency and improving those margins?
No, look, I mean, I think the rebranding of Vodacom was long overdue, especially with the deal they did with Vodafone. I think it just had to happen at some stage. But generally, these guys in the telco space always have to spend a lot of money to be in the face of clients. Because just how much more can Vodacom charge me for a gigabyte of data if I can just walk to the next shop with Hater and buy it cheaper? Cell C, competition is very tight.
But do you want to be buying Hater right now when you know that in terms of access to what's the word I'm looking for?
Access to the bandwidth.
Basically, it's not great. Hater is really unreliable right now.
I'm just really talking about it from a competition perspective here. You've got Cell C, Vodacom and MTN. Yes, maybe those guys will compete aggressively with the Vodacom. But the challenge in the data space is the fact that prices are going to continue to go down, in my view. I think the increase in competition will see you buy maybe a gigabyte of data, probably maybe for $50 in the not so distant future. So as much as it's growing in volume, I don't think it's gonna continue to attract good margins. So
we're talking about the share price at a record high, though. Are we going to see tamer growth from here? Is the share price hot at a record high?
I can sense that Owen wants to say this one isn't hot, so I'm going to say I think it is still, because I think for the entire history of this industry's history, people have underestimated its earnings power. So I think even at this elevated level, they're going to continuously surprise people with the strength of their earnings and all their new offerings, and people's data bandwidth is going to go through the roof. So yes, I think it's still hot. You can still buy it at this level.
Is the Red Telecoms operator red hot or not?
Listen, I mean, Paul looks at these names with a long-term view. For example, I've got a short-term view. I think I'll be challenged to buying a Vodacom at 106.
Where would you buy it?
I'll be a buyer anywhere near $100. It's definitely well bid, and foreigners, I think, are starting to up their holding in the name in a bid to reduce risk from MTN's global issues they've got. So the guys are starting to shift into Vodacom now. So a pull back to 100, 103, I think I could start looking.